Ladies and gentlemen, a warm welcome to Bilfinger Capital Markets Day 2023. A welcome to the people outside watching us via stream, but especially to all of you being with us today here in Frankfurt. Good to see you in person again. My name is Bettina Schneider, and I'm here together with our Group CEO, Thomas Schulz, and our CFO, Matti Jäkel. Safety first. In a case of emergency, please follow the green lights to the emergency exit in the back to the right, and here to the left. We will now start with the financial figures of 2022. You will have several opportunities to pose your questions. And with this, I hand over to Thomas.
Thank you very much. A warm welcome from my side too, especially here to the auditorium, as well as to our guests online, and a very special hello to all our colleagues around the world where we know they watch that webcast too. So, the year 2022. When we look into, we delivered that, what we promised on the outlook for 2022. We said that we will have a significant increase in the revenue, and we delivered that from 3.7 to 4.3. It shows the attractiveness of our business and especially our business model in the market. EBITDA, 121 we had in 21, and we had with the efficiency program a reduction in the fourth quarter of roughly 62 million euro. That gave us 75 million for the full year. If we look into the free cash flow, we promised to be on the same level. We actually outperformed the level of 2021 with a 136 million euro. The highlights of the year are, we have a growth, an organic growth in the order intake of 14%. We have an organic growth in the revenue of 14%. Our EBITDA margin adjusted, and we do that for transparency reasons and like-for-like check, where Matti will go more into the detail where it comes from, is 3.2%. We have in all countries, all technologies, all industries, a positive market momentum. There was not one area which was not growing and having a positive outlook in 2022. And in that, we have to say that we were more negative up to October in that area, most likely very much influenced about all the discussion of upcoming recession and so on, but the fourth quarter didn't show that. And in the capital markets strategy explanation, we will explain where that comes from for Bilfinger. We have a free cash flow, which is quite an increase of 136 million euro, which makes us actually quite happy, because it's a very good indicator for management capabilities. And we propose a dividend of 1.3 euro per share. The efficiency program, what we announced with a lot of attention, I have to say, in the capital markets, is on track and well under the way to be finalized at the end of this year. The outlook for next year in that market, with that what we do with the company, what we come to with the strategy review, is 4.3 to 4.6 billion for 2023 in the revenue and 3.8 to 4.1 in the EBITDA. Important in our business, important in the so-called being of Bilfinger in the market, is the ESG target set. And we as Bilfinger, if we sell what we do, efficiency and sustainability, we have to be efficient and sustainable too. On the left side, you see the GHG target set, scope 1 to scope 3, what we now report on, up to scope 3. And you see not only in absolute in scope 2 and scope 3, or especially in scope 2, that we actually reduced the CO2 equivalents quite significant, despite having a 14% revenue increase. On the right side, it's about safety, which is an unbelievable important indicator for our capabilities within the industries where we act. The trend, what we see here, is not positive. We move away from slightly from the zero target. we do a lot, and in 23 too, to get that trend back towards the zero. In comparison to the industry, we are actually quite leading in safety, and a lot of clients are trusting us a lot that we help them to improve their figures. Out of that, the orders, if you look on the movement, what we have from 4 billion to 4.6 billion, with a 14% organic growth is quite significant. And it follows a typical pattern what we have, roughly 2/3 in service and frame contracts, very normally longer time in how the contracts are looking like, and then roughly 1/3 in projects. Our order backlog grew quite significantly, and we have a very healthy book-to-bill with 1.07. On the right side, you see the revenue, and the revenue, the same as the order intake, grew 14%, and more or less the same ratio between the service contracts as well as the projects, with 2/3 to 1/3. And with that, I give to our Group CFO, Matti.
Yeah, Thomas, thank you very much. Warm welcome here in Frankfurt and on the stream. This is a great turnout here and on the stream, so thank you very much for taking the time to join us today and listening to us. I think we have an interesting program, not just on Q4, more importantly on the strategy. And as you had the chance to visit our booth upstairs, give you a little bit of a flavor what Bilfinger is really all about. Just to shed some light on the fourth quarter, I call this tailwind. 21% organic growth in orders received, 20% organic growth in revenues. If we think back about 3-4 months, everybody was talking about recession, and it was recession and recession, and it was nothing else but recession. That really subsided in November and then in December, and more so in January, as we have seen in all the publications in the newspapers. We were carried through the end of the year on those growth rates. Gross profit increased to 121 million. EBITDA margin adjusted, and I'll come to why are we also showing adjusted in a moment, 4.3%. Good cash flow above prior year of 124 million. And last but not least, interestingly, the SG&A ratio, which we have reported for the last couple of years very intensively, for the first time below 7%, 6.6% on a high turnover. Looking at the quarterly development of our revenue, you see that Q4 2022 has been the strongest quarter of the last 8, and even compared to last year, a 20% growth rate. All segments, all businesses, all technologies, all the way through growth rates, growth rates, and growth rates. So that in the end, 4.3 billion, a total of 14%. So the growth has increased over the year. Looking at gross profit, 121 million in the fourth quarter compared to 107 million in the last year, for a total of 437 million, quite a nice increase over the 387 million in 2021. SG&A, as I alluded to before, 6.6% in the last quarter compared to 7.8% in Q4 2021. So for a total of 7.1% over year, you see the cost did increase 307 to 291, but that's only 5.5% increase compared to revenue growth of 14%, which took the percentage down. Briefly on the EBITDA, and here is one reason why we also show adjusted. In 2021, as you can see, we had adjustments all the way through the 4 quarters. In 2022, 10 million, that was the adjustment, the provision that we took on exiting Ukraine and Russia. While we stayed in Ukraine, we completely exited our Russian business by the end of 2022, which is driven and has been driven by increase in sanctions. It made us impossible for us to stay in the country and continue to work. Then 2 quarters, 2 and 3, no adjustments. Then we decided on the necessity and the implementation of the efficiency program, and we took a provision of 62 million in the 4th quarter, and you see here that adjustment did hit in the 4th quarter. So for the total year, reported EBITDA 75 million, 1.8%, but 65 million in total for adjustments. That's the efficiency program. On
Capital gain. The capital gain.
Yes.
Yeah, and we had a capital gain on selling a business that had to be reversed. Yeah. So that is that also went into the adjustments. For 140 million, 3.2% in 2022. On the efficiency program that was announced in November, we also had the investor lunch in December. The program in itself has been confirmed. We look at a capacity reduction of about 750 workplaces with a savings potential of 55 million euros annually, starting in 2024. Out of that 55 million, we will reinvest into education and training of our employees, 25% of the 55. So we're looking at a net improvement of around 1 percentage point on revenue. One-time cost of 62 million has been included in the financial year 2022. We're making good progress on designing the adjustments to the organizational structure, and we come to this in the strategy part of this. We're looking at further savings in procurement, and you will see the first improvements of the run rate should be visible in our P&L starting with the 2nd quarter of 2023. Now this is a busy slide, and I know that, but I felt it was important to go into a little bit more detail here, demonstrating why we're also reporting adjusted figures. Starting off on the left-hand side, on the bottom chart, with 137 million in adjusted EBITDA, special items of 121. Then the financial result positive impacted by tax credits or interest on tax credits and the write-up on Apleona for an EBIT of 115. We had huge tax credits in 2021 from the years 2005 to 2009, hence a positive tax number here for an earnings after tax of 123 million. Then here again, a positive impact, 7 million in the discontinued business, also has to do with the Apleona deal. And then on minorities, not much. So EBITDA adjusted translated into a net profit of 130 million because of those positive effects. Looking at 2022, I would say more of a normal year and a normal development, except for the special items, mainly the efficiency program with 62 million, taking the EBITDA adjusted down to 75 million. A normal financial result of minus 24 million gives you an EBIT of 52 million. And then a higher than usual tax rate, because we're not capitalizing tax losses carry forwards in certain countries, taking off 20 million for earnings after tax from continued business of 31 million, and then minus 3 million for the minorities, for the net profit of 28 million. So if we look at 2021 and 2022, you see very different developments, and hence that's the reason why we're also showing adjusted figures for 2022. Cash flow, good operational improvement, quite a bit of an increase. You may remember that in the free cash flow of last year, we had positive contributions from sale of real estate and taxes. So if we compare the 115 to the 136, there is even more operational improvement included in the 136 that you would see on first phase. I think that should be it for the numbers on Q4 and the full year. And as I said earlier, there was a lot of tailwind that carried us through to year end and also into 2023. And how that is going to carry us forward, that's up to Thomas.